Hello, everyone. Thank you so much for joining us today for the Controller's Guide to Accounts Receivable Automation in 2024. My name is Devin Clark. I will be moderating today's session. I'm Centime's Director of Demand Generation, and I'm joining you today from Boston, Massachusetts. Please feel free to share where you're joining from in the Zoom chat. Before we begin, I just want to go over a few webinar housekeeping notes. So first, we are recording. So if you're curious to go back and rewatch this webinar, we'll send you an on-demand recording via email in the next few days. Secondly, please engage with the polls. It gives our speakers an understanding of who you are today, and it really helps guide the conversation. If you're joining from CPA Academy, you are required to answer at least 3 polls for CPE credit. So there will be 4 polls in total today. Once we launch a poll on Zoom, there will be a pop-up on your Zoom screen where you can select your answer, and then you'll have to submit the poll. If you're having any trouble, please use the chat so we can follow up with you following the session if you haven't completed the required polls to earn credit. And then last, we are on Q&A and chat, so we encourage you to submit any questions you have for our speakers through the Q&A feature on Zoom. We do have a packed session, so we'll try to answer all of your questions throughout the session, but if we don't get anything to, we'll reach out to you following the meeting. So with that, I am pleased to introduce to you our speakers today. We have BC Krishna, Centime's CEO and founder, and we also have Sergio Tzianos, Centime's Chief Product Officer. So BC, would you mind sharing a little bit about yourself and why you're so equipped to speak on today's subject? And then Sergio, you can follow.
Yeah, sure. So thank you everybody for joining. My name is BC Krishna. I'm the founder and CEO of Centime. I've been here for about 4 years, and prior to this, I've spent time and started a couple of fintech companies in the accounts payable automation space, and prior to that, fraud detection companies. Am I equipped? If you say I'm equipped, Devin, I am equipped.
Okay.
But I suppose you're equipped to talk about things if you have strong opinions, and I have strong opinions on this. So whether they're helpful or useful or not, we shall see. But I've spent a bunch of times thinking. Sergio and I have spent a bunch of time thinking hard about like accounts receivable and what is it and what does it take to maybe do better than the industry standard practices, and hopefully we can regale you with our insights from the last 4 or 5 years.
And thanks, Devon. My name is Sergio, and I'm the Chief Product Officer here at Centime. I've been at Centime similar time with BC for years. Before that, I also worked in the accounts payable space, in banking and payments as well. And why am I equipped? I think, as BC said, we spent bumped our heads together to kind of try to build a solution that helps businesses automate, streamline accounts receivable, but also think about the cash impact of accounts receivable. We've gotten some pretty interesting case studies from our clients, how we're helping them, which BC will go through. So equipped from the process of building solutions that help businesses improve their day-to-day and achieve positive outcomes.
Amazing. Well, BC, I know you have a lot to go through today, so I will let you share your screen and we can dive into the meat of the content.
Yeah, sounds good. So, whoops, hang on one second. Let me find the right presentation here. There we go. Yeah, so are you seeing my screen?
We can see your screen. It looks great.
Okay, so I think what I'm going to do is to step back a little bit and reflect and wax poetic about like the AR process itself, because as with all of these things, a lot of it is about like human psychology and why people behave the way they behave. And it's always helpful to think about the kind of emotional elements of the payment process, both from the perspective of the person making the payment as well as the person receiving the payment. What are their proclivities? What are their strengths and weaknesses? And why do people behave the way they behave? Um, I am a huge believer in the goodness of mankind, and I really believe that people function, normally most of the time. But every so often, given the chance, people will pay late if they can get away with it. And I think some of the data that I'm going to share with you is suggestive and reflective of that. Good relationships between buyers and suppliers end up with good behavior on both parts. But sometimes, we deal with a very diverse set of buyers and suppliers in many different industries, many different backgrounds. And I think there are some tangible reasons why people behave the way they behave, or companies behave the way they behave. This is mostly about B2B payments, of course. But many of you that are AR professionals, provide payment terms. And when you do provide payment terms, you expect to be paid on time. But there are many things that occur in the payment process that cause people to not adhere to payment terms. And I'll spend more time on this. But I feel like, people sometimes do pay late if you can get away with it. And get away with it is perhaps too strong a term, because it is the case that there are some very tangible reasons why they may be paying late. It may be because they have sloppy AP processes, right? So you're the AR person, you send an invoice out to a person, to your counterpart customer, and they have an AP process which may not be the most streamlined process. And having spent a bunch of time in the AP world, I'll tell you that most companies don't have a good AP process, right? It's manual, it's ad hoc, it's paper-based, and often it's the squeaky wheel that gets the grease. So poor AP processes result in bad payment behavior. Sometimes it's the case that you're the smaller party and your customer is the larger party, and often they feel they have leverage and they use it. And I've been in situations myself, as a provider of software to larger companies where we just get bullied by the larger company. And they pay when they pay, and they use their leverage because they can do that. And there's all kinds of working capital implications and other incentives that are poorly set up, to really kind of cause that behavior to take place. These are things that are important to just really understand, because if you understand it, then you can set up the terms appropriately so that you can then avoid the problems down the road. Seasonality matters, of course, right? Seasonality for you, seasonality for them. And that, of course, then translates into things like, working capital. If you don't have the cash, guess what? Given a choice between making payroll and paying your supplier, 9 times out of 10, what people are going to choose, right? 99 times out of 100. Cash matters. And so who are you going to pay? When are you going to pay them? How much of that open invoice are you going to pay? So these are factors that will cause and influence, behavior. So, this is sort of, all factors, but I think we're also in an environment where interest rates are higher, I shouldn't say. They're up from zero, which is the sort of lowest interest rate sort of period that we've had in the 75 years that the Federal Reserve Bank has been publishing interest rates, right? So in the last 75 years, there's only about a 10-year period where interest rates have been held at about zero. Well, now we're Fed funds rate is north of 5%. If I pay my supplier more slowly, well, guess what? I'm earning 5% on the cash that I have sitting in the bank. Maybe I'm going to start to shop around to see which bank is going to be better interest rates on my deposits. These are all factors that also influence behavior. But the couple of points I do want to make is that and I want to get to some data. The payment delays vary by industry. This is my point about counterparties. Like, who are you as a supplier? Who are you as a customer? And these are factors that really significantly influence the payment delays. So what I wanted to do is to show you, some of you may be familiar with this report. It is a great report to take a look at. You'll get this presentation eventually. And when you get this presentation, I've included in this a link to the report. This is updated every quarter. And DNB and the Credit Research Foundation that work together on this report, if you don't already know it, please take the time to go find it. And I want to sort of put it up for you, because what it does is it sort of breaks out the basically the delays, the payment patterns. AR and DSO report is what they call it, Day Sales Outstanding report. And if you kind of scroll through it, you can see not only by industry vertical, but also sub vertical, what percentage of people are paying current. Now, Again, this is across the entire industry. And as they say, your particular company may have, a different experience, but by and large, it also could serve as a benchmark for what you should expect. Again, there's two ways to look at the number like this. The optimist will say, hey, this is a high number, and many people are current. The pessimist would look at this and say, guess what? Like, something like 20% of people in a wholesale farm supplies vertical pay late. You know, and so 20% is a big number. But if you kind of scroll through and look at it, some of these industries are really, really badly impacted. Social services under business services, like 23% of people, 72% of people pay late in this industry. This is kind of symptomatic of all of the things that I just highlighted. Who are you? How much leverage do you have? Do you have cash? Do you not have cash? These are all factors that really matter, right? How much, what are your processes? So I just want to highlight a few things. Those of you that are in the construction industry, probably know that, you are among the most badly affected across the entire subsegment, right? By and large, when I looked through this report, I found that just about every segment of the construction industry is badly affected, and so on and so forth. Consumer goods, you can see some pockets that, who knew that, men's and boys trouser manufacturers are like really badly affected, but who also knew that this stuff was being tracked at this sort of fine grain level. So I just want to really share with you this as a resource, because this by benchmarking, what it does is it gives you a sense for where you need to go, where you are, and where you need to go. If you're below this number, in other words, if your customers, if the percentage of invoices are below those that are paying current in your segment, well, like where what your destination is. On the other hand, if you're better than this, then pat yourself on the back and go home early today. So I think these are really important kind of benchmarks that I think help us assess, how there are two things that I'll keep coming back to. Where do you want to go? How do you want to get there? And Sergio will talk a little bit about how we get there and what paths, we need to travel to get there. But what I wanted to do is just really kind of lay out the basics for, some of our benchmarking and so forth. The other thing that I wanted to do as a resource also is to share with you one other thing, which I'll get to. But another comment I want to make, and you might not be thinking about this, but look, at the end of the day, when you offer extended payment terms, like, 30-day payment terms, let's not forget that you are like a bank. You're offering credit, right? You might not think of it this way, and you might say, well, every one of the peers in my industry offers payment terms. It's a competitive issue, and therefore I need to offer payment terms. And that may well be the case. But if you are going to offer payment terms, let's not forget, there's no escaping the fact that you are a creditor. You are lending. You are like a bank. That means that you have to think about the capital that is impacted, in your business, right? Effectively, what you're, not earning is the capital that you don't have in the bank because you've ended up, extending payment terms. It also means that you have to be thinking about your counterparty, your customer, just like a bank would. Just put yourself in the mindset of a bank. If you go to your bank and you say, like, I want to borrow $50,000, what would they do? They would put you through a KYC process. They would put you through a KYB process. They would give you terms that they would stick to. They would have penalties. And I'm not suggesting that you should do all of these things, but if you have leverage, if you have the ability to do this, you should do it. Why do you want to provide extended payment terms if you don't have to? A lot of people simply provide extended payment terms because that's what is expected, right? I didn't think about it, right? But I think it's a really an important element of, there are two things that I'll highlight in this whole process, but that's one. And the second is just really being able to have more control over the getting paid process. So this kind of is important. Process matters. A lot of times, like, AR professionals will get too focused on process, things like dunning letters and collections and, teams and how are they divided and sending invoices and all of these types of things. Those are all important, trust me. But at the end of the day, this is about working capital. The second resource that I want to point you to, and this will also have a link, is a really an excellent resource that is provided by an outfit called the National Center for the Middle Market. And it's kind of really designed for companies that are north of 10 million. But even if you're south of 10 million in terms of revenue, it's worth taking a look at. But what it does is it's a very simple way for you to assess what the improvements in collections are going to do to your working capital. So you can pick your industry, pick your revenue, pick your gross margin, and then you say like, okay, what is your average days today? And then it tells you where you benchmark and what your opportunities are. More importantly, what your working capital benefit is going to be for every single day increase in DSO. This is all an example of benchmarking and allowing you to establish your destination for where you want to go. And I want to keep coming back to this. Yes, it's about process, but ultimately it's about cash. It's about working capital. The heroes in working capital are, I mean, the heroes in accounts receivable are the ones that can deliver a measurable, meaningful target working capital improvement to the balance sheet. So the other point I want to make finally is that, right? Where do you want to go and how do you want to get there? As much as I was, trying to denigrate process, ultimately it is about process. Don't get me wrong, right? And I want to highlight a case study from one of our customers, and a big, huge, massive disclaimer, of course. I'm the CEO of Centime. I run the company, but it's also my job description to be a shill for our product. And I'm very proud of our product, obviously, and I strongly believe that, we can make a difference. But this webinar is not necessarily about our product. It's about the practice, and it's about products that you can use and perhaps you already use to help improve your working capital by automating your accounts receivable. So this is about a case study from one of our customers. And basically what they're about a $5 million company. And you can see, some of the legend here. The blue line is their collections effectiveness, how effective their collections were. The red line is their average days past due. So you can see, like, they were growing as they invoiced more customers. Their collections effectiveness was pretty bad, and the collections, the days past due, average days past due, continued to increase. So they knew this, they saw this, they put in a person to try to manage it itself. It had an impact. You can see the manual collections, the days past due dropped, their collections effectiveness increased. But at the same time, they realized that they couldn't do this manually because it would just simply mean that they would add a lot more people. They implemented our product. And as a result of implementing our product, you can see both the average days past due dropped dramatically, but also it was the case that the collections effectiveness went up significantly. Those are the symptoms of effectiveness. In other words, the symptoms of unhealthy operations really reduced. But for the CFO, what it really meant was that, for the business, what it meant is that just in one quarter, they were able to improve their working capital position by $900,000. And that translated to something like a $2.3 million annual benefit. That's my point. At the end of the day, it's about how is it going to impact my cash, my working capital. So what I'm going to do in a minute is to turn you over to Sergio. And Sergio will walk us through 6 or 7 things that I think will impact your working capital. And these 6 or 7 things that I'm going to highlight here, every single one of them, you should view through the lens of what it's going to do to improve my working capital or reduce the risk that I am going to collect on time. So know your customer. I think a lot of companies simply don't do, right? Who is my customer? Are they credit worthy? Can I do some rudimentary checks to see what business they belong to, what segment they belong to? What is the health of the company? Obviously, when you're selling and you're taking the order, your emphasis and your salespeople might be more focused on booking the order rather than validating the customer is real. But all of us have been in situations where the customer is simply not credit worthy, where they are in a business area which are, cash constrained, and their working capital position may not be great, which basically means that you're setting up for some downstream risks. Digital invoice presentment and payment acceptance is about making it easy for your customers to see what is invoiced and how they pay. For those that don't have a good AP process, this can help. Flexible customer choice on payment terms, right? Yes, you want to provide payment terms, but what you're also saying to them is, hey, these are the payment terms that I'll accept. Maybe you don't provide 30-day payment terms. Maybe it is about combining payment terms with a dynamic discount where you say, yes, I will give you 30-day payment terms, but instead of 210 net 30, I'll give you a sliding scale of discounts. So you, Mr. Customer, can choose based on what you think is the best option for you based on your own cash position. Credit cards are always a controversial topic. First reaction people have is obviously to say oh my God, it's going to cost me 3% to collect. On the other hand, for certain types of customers, it may be a good choice because it gets you to the point where you do have a greater control over getting paid. I think the greatest opportunity is the next one, which is you can provide payment terms and also do an auto pay. I don't think a lot of businesses really take advantage of this, which is to say, yes, I'll give you 30-day payment terms, or if you do want 30-day payment terms, I will pull money from your credit card, your debit card, or your bank account. That often can work, right? But you can't say I'll give you 30-day payment terms, allow you to pay me based on your own process. There's kind of a healthy discussion that can be had, but auto debit, I think, is one of those areas that is sort of under leveraged in this process. And then, reminding them that you're a creditor. You expect to pay me. I am going to remind you 10 days, 15 days, 20 days before the payment comes due, not wait until the payment is past due and start sending you nasty dunning letters and turning you over to collections. That case study that I showed you was all the result of doing proactive outreach to customers before the due date. It has a huge impact, and people don't realize how much of an impact it has. Automating cash application. Many businesses today use their accounting system and the features within the accounting system to do streamlined, straight through cash application. But 20, 30, 40% sometimes of payments can cause exceptions because, there's a discount taken, a credit applied or something, right? And so there's a mismatch between your accounts receivable and the cash that was posted. How do you streamline it? Why do you need to streamline it? Why do you need to speed it up? Well, because not so much you're trying to save resources. That's important. But, it's also the case that you are going to be able to update the cash position, which has an impact on how you report your forecast. And then finally, how well am I doing? You can't improve what you don't monitor. So tracking collections performance and other AR trends is an important element. What are my DSOs? How are they trending? What are my days past due? How are they trending? How do they go from quarter to quarter? Who are my worst customers? What is the impact to me based on the customers that are paying late? Super important to actually use a data-driven approach, but also always ensure that the things that you're focused on have a direct impact on your cash and working capital, right? I think sometimes we can get caught up in metrics, that are more symptomatic, right? Yes, pain is reduced. Pain is reduced is a good symptom, but the reduction in pain is often, the result. An improved outcome is what results in a symptom like the reduction in pain. So I did take more time than I planned to, but hopefully at this point, it makes sense, and this framework can serve Sergio as a way for us to walk through the Centime AR solution. Again, the goal is for you to think about it as certainly something that can help, but also if you have an AR solution today, to use this as a lens to measure your own AR performance.
Yes, thank you, BC. And I just want to let everyone know that we're launching poll number 2 right now, and we'll give you guys about 5 to 10 minutes to submit your answers. And Sergio, I'll let you take it from here.
Thank you. Are you able to see my screen?
Yes,
Yep.
we can see your screen.
Amazing. So I'm going to try to put a picture is worth 1,000 words, they say. So I'm going to try to take the framework that BC talked about and visualize it through the lens of what we have done over the last 4 years. The product that we've built, which is helping a number of businesses not only tactically optimize their accounts receivable and collections process, but also create the connecting tissue between what BC talked about, the collecting, getting paid faster and better, but also the crucial impact that this has to the cash of the business. What you're seeing here is our dashboard. Our dashboard has many other things apart from AR, because we do more things. We connect banking, cash forecasting, planning, payables, and receivables. But for the purpose of today, obviously, we're going to focus only on the AR aspect of our product. The way we think about AR is that it's a combination of strategy and tactics to get to an effective collections process. And what is crucial to be able to develop a strategy for collections is to have data, understanding customers. That is the first point that BC mentioned in his set of features. So we have a key performance indicators part of our product, where within that, we try to easily package information about the collections and about the customers of the business. Just one quick note to make sure that this is clear. I am now wearing the hat of a controller or an AR manager of a business that sells to other businesses on terms. So I'm now looking into presenting to you how I will strategize to create a collections process using our products and team for my customers. And also, I'm going to then wear the hat of a customer who is paying the business against open invoices. So I'm going to be wearing two different hats during this presentation. I'm going to clarify when I'm changing hats. So what we're seeing here is the last 12 months, basically last year, the whole of 2023. So I have selected 4 quarters, and I'm looking at some key performance indicators that relate to the collections process. What was my collections effectiveness? What percentage was overdue? What was the DSO for the entire period? Average days past due, turnover ratio. All of these are critical KPIs for an AR collections process that are oftentimes not really easy to package and to view as a day-to-day in a day-to-day AR process. Now, the important thing I want to focus on is knowing my customers. So what we see down here is a very simple summary of all the customers that had open receivables during the course of 2023. Just to preempt that all of these are dummy numbers for the purpose of a demo and dummy customers. None of these are real businesses. But fundamentally, what this enables the business to do is to understand, for example, who has the biggest impact on cash. You can see this last column, impact, is basically looking to package what is the impact on cash that every customer creates to my business, to my working capital. So understanding who are the biggest contributors to late payments, to cash impact, can help us create collection strategies which are segmented based on people who pay us well, people who pay us late, people who are so and so, sometimes early, sometimes late. So we can strategize using data. So what do you do? What do you do when you have somebody who is paying you very late, for example, and it's creating a huge cash impact? One is that you can have a discussion about terms. 2 is that you can establish a better process in terms of how you communicate to them, because it might not be that these guys are, always intending to pay you late because they want to, but as BC said, they might have a poor AP process and simply losing invoices. So what we've built, knowing that a business that processes 100, 200, 300, or issues 100, 200, 300 invoices a month cannot physically be able to communicate multiple times with multiple customers manually, what we have built is a concept of workflows. Workflows are automated sequences of different types of communications, either external to the customers or internal to internal stakeholders, for example, project managers, sales managers, customer success managers, whoever is touching the customer in any way, that helps the business basically package, automate the entire communication flow with the customer, both on a proactive basis as well as on a overdue basis. So what I mean by that is, let's look at this workflow, which is called slow payers. What we've done is basically say, I'm going to build a workflow that consists of an email going out 14 days before the due date, an email going out 7 days before the due date, an email going out 7, 14, 21, 28 days after the due date, if the invoice is still open. And by the way, 21 days after the due date, I'm also going to notify internally my controller, for example, that this is a really delinquent invoice that needs further attention or it needs to be further escalated for visibility. An important aspect of campaigns is that they're all fully personalized, meaning that I don't want to talk to people who are, let's say, large customers in the same way that I'm going to talk to somebody who is like a small customer that I really don't have so much, such a relationship with, for example, or recurring customers or whatever that segmentation might be. So each of these nodes that we send, each of these emails that we send are fully personalized. The business can use their own tone of voice, their own. Some people are much more precious about how they talk. Some people are much more direct in how they talk to their customers. It doesn't matter. We can support basically all of this in order to achieve ultimately a personalized communications from our customers to their customers. Now, all this is set and forget in a way because it runs automatically. So what is the outcome of this is that now we looked at this customer who is basically always paying us late, and during the course of 2023, they have created a huge cash impact. So now we can use the accounts receivable module to set them up on a workflow so that they get now going forward for every open invoice, they get continuously communicated proactively about these open invoices. So you can see this is the customer that has created the big impact and is continuing to create the impact because they have the biggest share of AR at this point in time. This is an aging view based on customers. So what we can do is basically say, I'm going to set cookies by Kathy on a workflow that basically is for my slow payers. So I'm going to select them and I'm going to say, yes, you are now on this workflow. So going forward, every invoice that basically we send, we will be proactively notifying you and sending you those reminders both before and after the due date. So now Cookies by Cathay is on an automated flow. And what happens is that they will be receiving communications automatically without the AR, the collector, having to do anything manually. And this happens continuously. It doesn't matter if somebody is sick, if somebody forgets about it. It happens automatically using the system. So an email comes in. This email is basically uses the language that has been defined. And of course, the call to action is to pay. The call to action is to make a payment. And what BC talked about is that what our clients are trying to do really quite a bit is move away from receiving check payments to actually receiving electronic payments. That's a key initiative or priority for many businesses to move away from having to basically receive, process, post, cash, check, manual check payments, which has a hidden cost but a very high cost for businesses that understand the true cost of processing check payments. So Centime offers a very intuitive customer portal which has multiple objectives. Number one is, of course, to ask the customer to make a payment. Number two, which is what our clients are saying, is that they want to offer a good customer experience. They want to make sure that when their customers are looking at their open invoices, they are processing payments, they want to have a good experience because that creates more stickiness, that creates differentiation as part of the relationship of a client and the customer. So this is our customer portal, and of course, it's fully branded to the business that is using it. And what I'm gonna do now is I'm gonna log in. I'm wearing the hat of the customer of the business who is using Centime, and I'm gonna log in and I'm going to basically show you what the experience is that a customer gets when they're using the customer portal.
And
Give me a second.
Sergio, while you log in, take your time, don't worry. I'm going to launch the third poll, and this poll is kind of all about rating on a scale of 1 from least important, 5 to most important, some of the features of AR. So please do that. And I think it may be helpful for you and BC as you kind of go through the rest of this presentation for what to focus the most on. So I'll leave this up for about 5 minutes and then we can kind of share the results from there. All right,
Perfect.
I'll carry on.
Thank you, Devon. So I've now logged into the customer portal. The customer portal is the portal that the customer will be seeing, and that contains all open invoices for this specific customer that they can then go through, review, and pay. So I can fundamentally do multiple things here, but the core is that I can look at the open ones, I can select them, I can basically make payments to one or more invoices at the same time. And at the same time, what I can do is I can see whether there are available discounts, I can download remittance information, I can also save payment details so that I don't have to basically key my credit card every single time. Centime houses securely the payment details of the customer so that they can basically save time every time they need to make payments. And I can download receipts and so on and so forth. So you can see unpaid and paid invoices. Fundamentally, the goal that we have and our clients have is to drive electronic payments through the customer portal, through a better experience for their customers to basically make payments. So the moment I click confirm, I can basically enter my credit card details, as we said, or I can basically select to pay by ACH. We support two payment methods, an ACH debit and a credit card payment. And when they confirm, we will process the payment. And now going back to the wearing the hat of the AR and the AR collector, what will happen is that the moment, and that's very, very important, is that the moment that we process a payment and we authorize either a credit card transaction or an ACH transaction, we will automatically post the cash to the general ledger, being QuickBooks, NetSuite, Sage, Microsoft Dynamics, whatever that system is. We will automatically apply the cash against the invoice that was paid. And also, importantly, we will apply any deductions that might have arrived by processing this payment. What I mean by that is that, for example, the customer might have chosen to apply a credit memo that was available to them against the payment. We will automatically post the credit memo, the journal entry, whatever is needed to basically make sure that this is accounted for in the general ledger. The customer might have chosen to basically take an early payment discount that our client offered to them. Again, we will post this as the appropriate mechanism in the general ledger to make sure that the early payment discount is appropriately accounted for. Cash application is a painful process, and automating cash application is a key objective for every single AR client that we have today. So when we process payments, we make sure that the cash is automatically applied immediately against the general ledger, and that also makes sure that invoices are not chased when payments have actually been received against those invoices. So now the question is, okay, it's all rosy, right? You said a workflow and everything is now automated. I don't need to do anything. But actually, that's not true. Because even if you continuously fire automated emails to your customers, it doesn't mean that people are going to pay. It doesn't mean that people are going to change their payment process. So the purpose of Centime is not to replace an AR collector, is not to say that you can run a team without anybody, but it's to establish a framework for the AR team to be able to fundamentally understand, establish an automated process and assist this automated process by understanding where they should be focusing their work. What do I mean by that? If I look at my aging view now from an AR point of view, what I can see is that actually I have the largest, this is sorted in basically descending order from my outstanding payment amount. So these are all my unpaid invoices. And what I can see is that I have a quite large invoice, which is for actually 90 days past due. So yes, you can argue that using the automated campaign, this invoice will be chased in a couple of days. But if this was my AR team, I would be focusing them on the 80-20, go after manually and chase the largest invoices, because this can create the largest impact to our cash if we manage to collect them sooner rather than later. And that's a very critical point, right? Now the collector becomes a strategic person behind collection, behind impacting cash by focusing them on basically where the key opportunity is to impact the cash. So what do we do here? There are, of course, multiple tools that Centime offers. We can basically have the collector send an email them manually and put their own perspective into the need to basically close off this payment. So I could basically say, you know what, this one is important. It's very late. So let me communicate with the customer. Maybe I'm going to sell them, look, this is very critical for us. Can we at least, get a promise to pay date from you so that we can plan our next payment runs. So Fundamentally, it's about giving the collector the tool to communicate and then to be able to understand what the impact is on cash. Should they collect this payment? Should they collect this? They are able to collect this payment? Why did I talk about promise to pay? Promise to pay is a very important feature within the AR space. Promise to pay is when a customer returns and says, "Look, I understand I'm late. Thank you for your communication. I promise to you I'm going to basically pay you on the 18th of January. Okay, at least I have an indication which allows me to plan to understand the impact on cash if this is paid on the 18th and have more certainty about when this payment is going to be made and what is going to be the cash impact. So what I'm going to do is I'm going to assume now that this customer came back to us and said, "Look, I understand I'm going to pay you on the 18th. So what I'm going to do here is I'm going to record the fact that this customer said that they're going to pay us. They promised to pay. And I'm going to do it in a way that shows also what will be the cash impact if this payment is to come through on the 18th. This is quite a complex thing what you're saying here, but fundamentally what we've done, and that was our vision from the very beginning, is to connect the dots between cash and AR, and of course cash and AP and other areas of the business. In this respect here, what we see in this graph is the blue line is the cash of the business. We have the balance of the operating accounts of the business, and we are able to basically plot this over the next few weeks, few days, few weeks, couple of months. And also with our cash forecasting capabilities, we can create the picture of the cash in the future. That takes into account all open AR, all open AP, as well as, of course, other liabilities the business might have, other income lines the business might have based on cash. However, what we are looking at here is the actual impact on cash from an AR point of view. So the green bars are basically open receivables, which are on a date over the next couple of weeks. So this, for example, on the 12th, we have 3,430 of open AR that is due to come in, that is expected to come in. Now, the focus of what we talked about here is the focus of this large payment, where the customer came back and said, "You know what? Thank you. I'm going to pay you on the 18th. So while this is 19 days late, I'm going to say there's a promise to pay date, and this promise to pay date is the 18th of January, based on what the customer said. And what happens now, what Centime does, as you can see up here, is we basically depict the cash of the business based on the information that it's forecasted, it's expected, it's promised. This invoice is promised to be paid on the 18th of January. So what we've done is that the light blue line that you see here is what the cash was before setting this invoice into the future as a promise to pay date on the 18th. And what the dark blue line now is, it is the expected cash of the business should this invoice get paid on the 18th of January as the customer promised. And what we can see here is that an AR collector, by focusing on this large invoice and by procuring a promise to pay date from the customer, they had a positive impact on the cash of the business. And that's the gist of this. That's what BC talked about from the beginning. It's a working capital issue. It's a cash issue. It is about creating also further certainty about what the forecasted cash balance of the business is. Finally, the last point I want to mention is that what we've been hearing lately from many, many businesses is that the trend of auto-debiting customers and auto-pay is something that is continuously increasing as something that people are getting aware of and are actively pursuing. So what this means is that there is a traditional, of course, collections process, which is I offer payment terms and I expect the customer to make the payment. But there is this new set of basically capabilities that allows the business to say, I'm going to offer you payment terms. However, I expect of you to give me a card on file or your ACH, your authorization to automatically debit your ACH, your bank account via ACH, so that I'm not relying on your potentially poor AP process, or I'm not relying on your you remembering that you have to make a payment, but I auto debit. So it's a combination, it's a discussion that needs to be had. It's a combination of basically offering terms, but offering terms based on the term that I'm going to auto debit your account. So what we do, of course, is we offer the ability for our customers to enroll their customers on Autopay, which is also facilitated through the same customer portal. So within our customer portal, our customers can basically send a specific note to their customers and say, you know what, we offer you payment terms. We would like you to enroll you for Autopay. Please click this button to authorize, and please then provide your payment details, and we will automatically charge your card or your ACH on the payment date. And by the way, they can also offer early payment discounts, because that's another incentive for people to pay late. So I can offer an early payment discount in exchange for you putting your card on file, so I can auto debit you 10 days before the due date, 20 days before the due date, 10 days after the invoice date, whatever the terms might be. So thinking back now, summarizing what we talked about, there is a fundamental automation layer that helps basically an AR team be a lot more proactive in how they communicate, and they attempt to, both before and after the due date, reach out to customers to remind them about open invoices through reminders. There are a lot of tools that allow the collections team to understand the customer behavior, to understand who is paying late, to have understand when an invoice is expected to get paid based on the payment patterns of a customer, to create tasks for the team, to measure the team performance, all of these things that basically are tools. Then there is the fundamental strategic question about how do we couple the payment terms with the Autopay or collection, so all of that flexibility. There is a customer portal that provides the ability for customers to make payments, but also to save payment details and, of course, enroll for Autopay. And ultimately, it's this picture. The picture which is the outcome of what happens if you run a collections process that basically attempts to drive faster payments, reduce DSO. It's the impact on cash, which is where we can always connect the dots back to that.
Thanks, Sergio. And I'm just going to jump in here. We did close out the third poll. And so some of these features that it looks like that the audience today really cares about is the first one being tracking collections performance and trends, followed by automating and streamlining cash application. And then it looks pretty close between automating customizable payment reminders and dunning letters, and a self-service customer portal to present invoices and accept payments. And then we have offering credit cards as payment option. And then the least important to this audience was offering flexible payment terms to speed up.
Devin, if do you mind? Actually, this is fascinating, like the survey itself.
Yeah.
And what I'd like to do is to just really share the screen. There's actually nothing like looking at it live.
Yes.
I just took a screenshot of the poll results, and I want to share that with the group here, because, I mean, we asked 6 questions, and we said, what is least important and most important? And you can just see by this kind of, look that, yeah, we can kind of nuance what's least important, what's most important, but you can also see that everything is just about equally important, right? I mean, within everything is within a few percentage points of the other in terms of like, least important to most important. The point is, I'd like to say that it supports the thesis that there's no silver bullet to the collections process or to the AR process in terms of how it has an impact on cash. They all matter. And they all matter because the circumstances are often different. And, there's no silver bullet because you have to do multiple things in order to achieve the goals that, you're seeking to achieve. Sure, it's important to have a portal. Of course, it's important to provide flexible payment terms. If your business is set up so that you're willing to absorb the 3%, fees, and also maybe pass some of the fees on to the customer, or maybe change payment terms in conjunction with offering credit cards, it's a wonderful option. Payment reminders. I think there's nobody there. Customers are not going to be upset when they receive a gentle note from you saying that, hey, listen, you have an obligation to pay me. Cash application is important. It updates your cash position. It updates the cash forecast. It gives everybody a a view into where things are. At the same time, like because of how you get paid, and again, it points back to using a portal, using auto debit as a way to control exactly how you're getting paid against the invoice that you've been presented, right? That the number of exceptions that result from an auto debit process is much less than those that will result when you leave it up to the customer to sort of trigger a payment themselves, right? And when you do that, then what you end up with is, faster cash application, faster collections, and more control. And again, I just want to repeat one more time, just because you're doing an auto debit doesn't mean that you can't give your customer better payment terms. You can. All you're doing is saying that I want to control when I receive the payment. So it's just really fascinating to me. And again, these are not like based on 2 or 3 responses. There's a meaningful number of you that have responded. Thank you so much. Almost 500 responses. Almost everybody has kind of, taken the poll. And you can also see the eye chart shows you how equally important each of these things are and how in any given axis, they're sort of more or less poll equally as well. Fascinating to me. Thank you.
Thanks, BC. And with that, I'm also just going to launch the last poll question so you have that as well, everyone. And we'll keep that up for the duration of the session. And we still have about 7 minutes left. I'm not sure if anyone has questions for BC or Sergio. We encourage you to ask in the Zoom Q&A. But if not, I do want to just share that we have a really cool AR business case builder that I will share the link to in our Zoom chat to everyone. All right, there you go. And if you're curious of how to build your own business case for AR, I'll share my screen as well. You can use our AR business case builder. This will calculate an ROI for you. It will give you CFO talking points, kind of following along the lines of what BC discussed at the very beginning of this session. And there's a whole section about how to evaluate partners. So you can do that with the link that we shared in the Zoom chat. It's centime.com/AR business case builder. And I just want to check to make sure we're not missing any questions. All right, it looks like, Sergio, you're answering this via chat, but maybe we address it.
We'll go live.
I'll jump in here. So, I think that Renee is asking, do you see better collection rates with the offering of paying by credit card, especially the fees are absorbed by the seller? Renee, I think that anecdotally the answer is yes, but as with all of these things, it sort of a little bit depends. If you're going to absorb the fees as the seller, there's no question that you're providing your customer with incentives that are huge, right? Obviously, you're giving them working capital benefits, you're giving them the opportunity to earn rewards, but at the same time, you're absorbing all of the costs. At some level, if you're going to do that, it would be wise to think about whether or not you're going to sort of absorb some of the fees rather than a specific fee associated with it. Maybe your service itself absorbs the fees. I would point to, Amazon Web Services and Google AdWords services that are very large ticket items, and these folks actually routinely accept payments by credit cards. And so, I think that's just an example of how, a credit card-based payment mechanism really sort of reduces, delinquency and latency in when you get paid. Again, it's not to sound like a broken record. Do consider not just a credit card as an option, but auto debit as an option. So in other words, card on file, whether it's a debit card or a credit card or ACH, gives you more control over the process. That can be combined with payment terms. For example, you might say, yes, I do accept a credit card, but I will require you to pay net 10. And on the other hand, if you want to pay by ACH, sure, you can pay in 30 days, but you know what? I will debit your account. So there's just some different dimensions to this that are worth being more introspective over. And rather than simply going to the knee-jerk sort of, I'll give you payment terms and I'll assume that you will pay on time and I'll assume that you'll use your own payment processes to pay me. You're basically ceding all control to your customers. And that's really the crux of it all.
Thanks, BC. I think that's a great answer. All right. We also, if you're very curious to learn more, get a more personalized demo and ask any questions that you have for our team, you can book a demo of Centime at centime.com/demo. We do more than just AR. We do AP, AR, cash flow forecasting, as kind of you saw. So again, thank you, BC. Thank you, Sergio, for the time that you dedicated today with us. And we appreciate every one of you joining, and I hope you have a wonderful rest of your day. Thank you all.